Paying a car insurance premium every single month feels like buying peace of mind, right up until the moment a claim gets filed and the insurance company sends back a denial letter instead of a check. Most drivers never read their full policy document, and buried inside that fine print are clauses that can void a claim entirely, even when the accident itself wasn't their fault. Before getting into exactly what to watch for, anyone who wants to stay ahead of situations like this should hit subscribe now, because this channel breaks down exactly what drivers need to know to protect themselves, and there's a lot more practical content like this coming. One quick note before starting. Insurance policies vary significantly by provider, state, and country, so this video is meant to highlight common clauses to be aware of, not to replace actually reading a specific policy or speaking with an insurance agent directly. The first hidden clause involves unauthorized or undisclosed drivers. Many policies only cover drivers who are specifically listed on the policy. If a friend or family member borrows the car and gets into an accident, even one that wasn't their fault, the claim can be denied simply because that driver wasn't listed as authorized. Checking who's actually covered under a policy and adding household member if they regularly drive the vehicle closes this gap before it becomes a problem. The second hidden clause is misrepresentation on the original application. If any information provided when the policy was purchased turns out to be inaccurate, such as underreporting how many miles are driven annually or leaving out a household member who also drives the car, insurers can use this to deny a claim or even cancel the policy retroactively. This is one of the most common reasons legitimate claims get rejected, and it's almost always avoidable simply by being thorough and honest on the original application. The third hidden clause involves illegal activity at the time of the accident. If a driver was under the influence, driving without a valid license, or breaking a significant traffic law when the accident occurred, most policies allow the insurer to deny the claim entirely, regardless of who was actually at fault in the collision itself. The fourth hidden clause is late reporting. Nearly every policy includes a required window for reporting an accident, often ranging from a few days to a couple of weeks. Waiting too long to file a claim, even for a valid, honest reason, gives insurers grounds to argue they couldn't properly investigate the incident, which is frequently used as justification for denial. The fifth hidden clause is a lapsed or inactive policy. If a payment is missed and the policy lapses, even briefly, any accident that occurs during that gap typically isn't covered at all. Setting up automatic payments removes this risk almost entirely and is one of the simplest fixes on this entire list. The sixth hidden clause involves using a personal vehicle for commercial purposes without the right coverage. Drivers who use their car for ride share, food delivery, or any paid work often don't realize that standard personal auto policies frequently exclude accidents that happen while driving for those purposes, requiring a separate commercial or ride share endorsement instead. The seventh hidden clause is the wear and tear and pre-existing damage exclusion. Insurance is designed to cover sudden, accidental damage, not gradual deterioration. If damage is later found to be the result of long-term neglect, such as ignoring a leak or driving on badly worn tires for months, insurers can deny the claim by arguing the issue existed before the incident being claimed. The eighth and final hidden clause involves exceeding policy limits. Every policy has a maximum payout amount, and if the actual damage or medical costs from an accident exceed that limit, the difference isn't covered at all. Many drivers choose minimum coverage to save money on premiums without realizing how quickly a serious accident can exceed those limits, leaving them responsible for the remainder out of pocket. Understanding these clauses matters because most denials aren't random. They're built directly into the fine print most people skip past when signing up for a policy. A few practical do's and don'ts make a real difference here. Do read the actual policy document at least once, specifically looking for exclusions and reporting deadlines. Do report an accident as soon as possible, even a minor one, rather than waiting to see if it becomes a bigger issue. Do keep documentation, photos, and records anytime something happens to the vehicle, since this becomes critical if a claim is ever disputed. Don't assume a policy automatically covers every driver in the household without checking first. Don't let a policy lapse, even briefly, to save a small amount of money. And don't use a personal vehicle for paid work without confirming the right coverage is in place first. None of this means insurance companies are always looking for reasons to deny a claim, but policies are legal documents, and being unaware of what's actually written inside one is exactly how legitimate claims end up getting rejected. Taking 20 minutes to actually read through a policy or calling an agent to ask direct questions about these exact scenarios can save an enormous amount of stress and money if an accident ever happens. For more videos that help drivers avoid these kinds of costly surprises, subscribing means catching every one as soon as it's posted.